The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Thursday, the 25th of February 2021. On the podcast today, Kiran Morzaria, CEO of Cadence Minerals, talks through recent news releases from Macarthur Minerals, Yangibana Rare Earth Project and the Amapa Iron Ore Project. Also, Nick Dashwood Brown, Head of Investor Relations at Anexo, discusses their recent trading update for the full year ended 2020. And Avihu Tamir, CEO of Kanabo Group, KNB, that's a medical cannabis company with the only medically approved vaporisation device, the VapePod, discusses their progress and plans going forward. And as always, at the end of the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most liked RNSs too. You can check out both these lists at voxmarkets.co.uk. We'd also see lots of other content. In fact, there's another article in Cellular Goods raises 13 million in IPO. There's Cadence Minerals, of course, talk about that. Dev Clever attracts significant new investor. Horizonte Minerals awarded power line license for Araguaia project. There's also an interview there. Check out Paul Hill and Alistair Smith, CEO of Vaporisation Group. So worth checking that on video there. Plus, our COVID-19 index. It's right here. We've got Hemogenics up 14%, 685 is the biggest riser on the COVID-19. Biggest fall of the day is Fusion Antibodies, down 6% to 117.5. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Kiran Morzaria, CEO of Cadence Minerals. KDNC is ticker there. Kiran, thanks for joining me.
A pleasure as always, Justin.
Yeah, you've got a lot going on, and there's news coming out all the time, so it'd be nice to look into some of these RNSs you've released recently, and also touch on Amapa if we could, because I know that's of significant importance amongst shareholders. But before we do, as always, just give us a brief summary for people never heard of you maybe. What is Cadence Minerals all about, Kiran?
Yeah, Justin. So, Cadence is an investment company. We invest in public and private assets, and we've specifically focused on the commodity sector around iron ore, so bulk metals and iron ore, and the minerals and materials that will power the electric revolution, which is coming through electric vehicles. Yeah,
it is a revolution, absolutely. So the Macarthur Minerals RNS out today. What's the significance of that? Or was it last night? I've forgotten the dates for it. No, today, that's right. So what's the significance of that to Cadence then, if you could?
Yeah, absolutely. So Macarthur Minerals is primarily an iron ore development company. They've got a substantial iron ore magnetite and hematite deposit in Australia, which they're developing. But historically, they've had some investment in both some lithium assets and some gold assets. So this is the significance here is that they've got. There's an interesting party doing some due diligence, which I assume is to, look at acquiring, joint venturing into some central gold in some lease tenements in the central goldfields of Western Australia. I think it's important two fronts. It probably, if that can crystallise, they can really focus furthermore effort into their iron ore deposits, which we're interested in. We've got 1% of Macarthur. And while I like this as well, I suppose it's an interesting thing about gold in itself as a commodity is that with all this fiscal, with all this very loose monetary policy, we're probably going to see some inflation. And, gold is an interesting commodity to be in, especially, and if there's copper associated, even better because of the use of copper in electric vehicles. But so this is really interesting for us. I think it's good to see Macarthur focusing on its assets, its iron ore assets, and would appear to be sort of divesting some of it and getting value out of some of its other tenements, which include its gold tenements and some lithium tenements it has as well.
Yeah, okay, cool. And again, another release there about the Hastings project there in Yangibana, a rare earth project, your joint venture there, Hastings Technology. Take us through that RNS if you could, please.
Yeah, this was really important because, one of the things that we've always seen as risks with these projects, because although they're technically really good and, the ones that we've invested in and have got stakes in that have been technically successful, was always that there's a large capex associated with it. And we've seen with Macarthur Minerals getting its equity portion of 65 million done. We've now just seen with Hastings this week that they've secured 100 million which basically is their equity portion for the capital development of their asset. And that Hastings asset has an NPV of around Australian dollars 549 million. It's got a mine life of 13 years. And, the payback period on this asset, 3.4. Now, what's the significance for Cadence? Well, we have a JV over some, like Bacanor, we have a JV of 30% over some of the licenses, in particular the Yangibana license. And there's multiple licenses, and that Yangibana license will get it's in the current mine schedule of their DFS. Will get mined from around year 6 to the year end. So that's there's a read across value there. So now that we know that it's technically successful, it's been managed to they've done a DFS. The next risk with the hurdle that they've achieved now, which is great. They've now got the full equity portion, 100 million plus I think they've got another 24 million cash balance, means they've now got the full equity portion to accelerate the development of this asset and bring it into production. It's a rare earth deposit. Again, rare earths, specifically this deposit, has got high levels of neodymium. And by their own words, they call it a world-class neodymium deposit, which forms part of the permanent magnets utilized in electric vehicles. Again, that same idea of lithium, rare earth minerals, which are really important in electric vehicles. So a great thing. We're seeing progress again across these assets that we have JVs on, Bacanor and Hastings, going into production, which is it's great to see.
Yeah, absolutely. And I can't let you go without, talking about the Amapa iron ore project, your sort of flagship there. How is that proceeding? Given the court ruling allowing the operator to start, shipping the material, how does that affect the settlement agreement you've agreed in principle with the secure bank creditors there, Kiran?
Yeah, absolutely. So, of course, we're not going to say anything that's outside of what we've already announced, but ultimately, as rightly pointed out, we have an agreement in principle with the banks, and we're now getting to, we're going through the drafting the documents of that settlement agreement. So that's progressing, and it's progressing well. The court ruling is entirely separate to that settlement agreement. They're not linked. The court ruling doesn't require us to accelerate the settlement agreement. It's DEV and is allowed to ship that material for a net of $10 million, which will be utilised as per the schedule, which is effectively to reinvest into the asset and pay off some labour creditors. So that will proceed. There's no linkage between the two. Of course, if we get the settlement agreement done before the first shipment or before the money comes in from the first shipment, then we'll apply it to the settlement agreement rather than the schedule. But if not, the operator gets the money and that gets reinvested. Why the settlement is important to Cadence? Because it is only upon that settlement agreement that we vest our 20%. So although the asset will be could be generating revenue, it doesn't really attribute to us until we have that settlement agreement done. So we're really pushing to get that done as quick as possible, so that we can vest our 20% and realize that value to us.
Yeah. Okay, so you're happy though? It's progressing very well, isn't it?
Yeah, absolutely. I think we've talked about this asset for for quite a while now, and the obstacle has been ultimately we've achieved targets along the way that we said we would do. The obstacle has been the settlement agreement with the bank. I wouldn't call it an obstacle. It's just taken time, both COVID. And we've got 3 banks across 3. I've gone about this several times. 3 banks across 3 jurisdictions with different business styles, etc., which just takes time for them internally to agree to get a consensus to come back to us. But every time they've come back to us, we've been responding within a week because we want to get this done. Because the quicker we can get our 20%, the quicker we can reinvest. and get this asset to production and take advantage of the stimulus that's occurring in the iron ore industry with infrastructure and fiscal spending across the world, and that is going to have and take advantage of these high iron ore prices.
Absolutely. Marvellous stuff. Well, you know what to do now, Kiran. 3 reasons, 3 bullet points if you could, why someone should hit that follow button and add Cadence Minerals to their watch list, please.
Absolutely. So let's get on the macro picture. The first reason is that Cadence is involved in assets across the commodities that we believe are critical for the critical for the future of electric vehicles, and are going to be critical for the fiscal stimulus that's going around the world at the moment. So we're involved in commodities and minerals that will form part of the future of electric vehicles and have increasing demand going forward. And we've got assets, so that's the first one. We've got assets, whether in the iron ore with Amapa, which we've talked about the value there. Under written down value by Anglo American, it was worth $600 million. Let's look to crystallize that value to us as well. And the last one is that we have a suite of other assets that are, substantially de-risked. We've invested them from all the way from pre-resource. They are now, as we've just talked about, at the point, or a large majority of them are at the point where they're funding to construction and revenue stream. So, the hard work is paying off here for Cadence.
Absolutely. Marvellous stuff. It's good to chat to you again, Kiran, and hopefully we're catching up in the not-too-distant future. Thank you very much, fella.
Thank you very much, Justin.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Nick Dashwood Brown, Head of Investor Relations at Anexo. ANX is the ticker there. Nick, thanks for joining me.
Morning, Justin. Nice to speak to you again.
Yeah, absolutely. It's interesting times. It's time is flying by. Yeah, we don't know where we are at the moment. We're in February, and last month you announced a trading update, which seemed quite positive, and we'll dig into that. Before we do, Nick, for people listening right now who don't know what Anexo is or what they do or what you do there, can you explain or summarise the business, please?
Surely. Anexo is basically a one-stop shop for the victims of no-fault road traffic accidents. We operate 2 divisions, one of which is a credit hire division, which hires out vehicles, cars and motorbikes mainly, to the victims of accidents. And our legal services division recovers the hire and repair charges from the at-fault motorists' insurers. Now, importantly, we concentrate on the impecunious market, and these are people who don't have access to the finance which they might require to replace a vehicle at their own cost or from their own resources. And that means that we are able to charge them credit hire rates for the hire of the vehicle, as opposed to the spot rate, which they might expect to get if they went into a high street car hire operation. They're not able to do that because of their lack of funds.
I see stuff. And of course, I mean, there's been, we talked previously, there's less cars on the road, but that's changed, and we're now back down, lockdown, but there's been a section in between, a period in between where the people were back on the roads and stuff. So trading update, full year 2020, it's been an odd year, but how's it looking, Nick?
Well, actually, the second half of the year has been very encouraging. It's interesting what you say about the vehicles on the road. Certainly in March last year, when we had the first lockdown, the number of vehicles on the road, and I think we were all aware of that visually, went down quite dramatically. And certainly the number of hires we put on in the first week or so of lockdown were probably 25% of the normal number we would do.
Yeah.
But it was interesting from our perspective that actually that recovered very quickly. Now, it's helped by the fact that we do a lot of motorcycle work, and we're particularly strong in the courier market. And obviously, we're all aware that couriers are particularly busy at the moment. But really what we saw was a slight decline in vehicle numbers at the beginning of the second lockdown as well. But actually, we've had a really good recovery in this. In our trading update, we pointed out that the average number of vehicles for 2020 is expected to exceed the figure for 2019. And we finished the year looking at record numbers of vehicles overall on the road. So actually, it's been very encouraging for us. The other thing to bear in mind is that a lot of our customers are classified as key workers, and therefore they've been on the road while other people have perhaps been sitting at home.
Yeah. I know it's sort of anecdotal, but I've seen a lot of people say it, and I notice it. At the moment, even during this lockdown, there doesn't seem to be any less cars on the road. It seems quite busy out there.
I think it is relatively busy, and as I say, deliveries have moved up. E-commerce has obviously come into its own, and as I say, couriers have never been busier. There is a an interesting shortage of motorcycles in the UK in general, because they've all been bought, because people are using them to get around. Incidentally, you may have noticed that Deliveroo announced a while ago that they're expanding into 100 different towns in the UK. And these are small towns. I think the one that stuck in my mind, probably because it was the last one, was Yeovil. These are not big urban places. These are places where clearly there is a demand for courier work. And that, I think, always works in our favour.
Yeah, absolutely. And you must be looking forward now, quite positively, because like I said, this is supposedly, it looks like it's going to be, with the help of the vaccines, of course, the last lockdown. So we are sort of reverting to mean slowly, aren't we, over the next few months?
Yes, I think so. I think it's worth bearing in mind that we never closed. Both our businesses, the credit hire division and the legal services division, are classified as essential businesses under government guidelines. So we remained open throughout. Obviously, we were very careful with the way that we looked after our vehicles. They get sanitized anyway when they come back off hire, and we were obviously very careful to make sure that was happening. In terms of the legal services division, Bond Turner, our offices were open 24 hours a day, so people could come and go if they wanted when they were working from home. Largely, I think, the majority of our staff are now back at work, obviously within COVID guidelines. But we didn't have to furlough large numbers of staff, and really, it's been remarkable how resilient the business has been. So, nobody's looking at winners or losers in this, but we have performed well throughout the pandemic.
Marvellous stuff. Okay, Nick, well, as normal, as usual, when you come to the podcast there, people may be listening right now, liking the sound of this, but not yet following the story. So just give them 3 quick reminders, if you could, why they should hit that follow button and add Anexo Group to their watch list, please.
We remain a growth business. The number of vehicles on the road, we put about 50% of vehicles on the road that we have the opportunity to do every year. There is a huge potential market share out there for us, and this particular sector has very high barriers to entry. Nobody really does what we do. That's point number 1. Point number 2, our legal services department means that we make sure that we collect the cash that we're owed. We have been expanding that and on a straightforward basis, that if we have more lawyers, we get more case settlements, and therefore there is more cash collection. The third point is that we're heavily involved in the litigation over the VW emissions case, which your listeners may be familiar with. Ultimately, VW has lost a High Court case on this and been refused leave to appeal. We're currently looking at approximately coming up to 15,000 claimants. We believe that this will move towards a settlement at some stage, and that is a potential windfall for our customers and, by extension, ourselves.
Excellent stuff, Nick. Good to chat to you, and hopefully we'll catch up in the not-too-distant future. Thank you very much.
Many thanks, Justin. Cheerio. Bye.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Avihu Tamir, CEO of Kanabo Group. That's KNB ticker. Avihu, thanks for joining me.
Thank you. Great to be here.
Yeah, well, listen, you're a brand new company in a very hot space. So I know people are very enthusiastic about the medicinal cannabis space, and it seems to be on fire at the moment, So we'll talk about the company in detail in a bit. Before we get into it, Avihu, can you just give us a brief summary, an overview of the business, please?
So Kanabo is a medical cannabis company. They're working on developing new products, mainly bypassing oral consumption of cannabis via vaporization and other methods, and a commercialization company as well, both in wellness sector of cannabis and CBD and the medical cannabis. And the goal of Kanabo is to take cannabis as a whole into the world of medical, and specifically in this fastest growing segment of the industry of vaporization of cannabis. So medicalizing vaporization.
I understand. And you got what's called the VapePod. Why do you see the VapePod as such a game changer then, Avihu?
We need to start by just understanding what's holding back medical cannabis. And we see it mainly in Europe and Israel. Except of North America, most of the world is basically before the tipping point, before the big change and the green rush, let's call it. And the main reason for that is that the medical establishment see cannabis as something that can be very helpful, but the delivery methods are from ancient times. 70 to 80% of patients on medical programs are smoking their medicine. And it doesn't matter who is the physician, even if he's a big supporter of cannabis, it's very, very hard to convince doctors, physicians, medical establishment that smoking is a medicinal intake method. And that's where we're coming. We're coming to solve this issue. How do we give patients what they're looking for? And that's the inhalation of cannabis, because it's fast onset, high bioavailability, very, very comfortable way to consume cannabis. But in the same time, providing the medical establishment something that is a metered dose that a physician can still prescribe, something that is healthy, and something that is a medical device with a medical formulations inside. So that's where we are. And this segment in North America is the fastest growing segment in one of the fastest growing industries. So that's why it's going to be very revolutionary, bringing it to a market that is a purely medical market, like the European market, like the UK, Israel, and many other more conservative markets, is a game changer, because that's going to be the only method that are validated as a medical device.
Yeah. Okay. And so explain to us, if you could, your vision, what does the future of Kanabo look like?
Kanabo is going to be a leader in the European market, in the medical cannabis market. We have many companies in North America. And even those that are supposed to be medical are more recreational than medical. The market there, the consumers there, are oriented recreational markets. So the products that are coming are recreational products. If you look at the type of products, it's usually very, very high THC. That one of the main reasons of these products is for recreational use. And that's what the market is missing in the rest of the world. So Kanabo can lead the market in Europe in medical cannabis, advance from being a company that's doing today product development and commercialization to a company that owns its own distribution channels, both in medical and in wellness.
Yeah. And apart from VapePod, and what else are you bringing to the market there?
So that's will be a surprise. We cannot talk about it yet before we're announcing. But there are other formulas that we're working on, other innovations in the formulas, more pure formulas that are for specific indications. And we're looking into other delivery methods that are bypassing the oral consumption of cannabis.
Yeah. I know there's different regulations around the world. So who, at the moment, who can buy your products and where?
So as I mentioned, we have two product lines. We have the wellness product line. It's cannabinoids, mainly CBD, but without any traces of the psychoactive ingredient, THC. These products are available as a over-the-counter consumer product in Europe, in the UK, in Germany. Very soon we're going to launch a more wide national campaign in the UK. And across Europe, basically you can buy it without a prescription. The second product line is a prescription only. It's medical cannabis. It does have a psychoactive ingredient at some level. And the only way to buy these products is getting a prescription from a physician.
I understand. Okay. And like I said, it's very hot at the moment in the UK. There's listed companies there doing very well, anything associated with it. How big do you think medicinal cannabis industry could be in 5 years?
The more conservative analysts are saying that the European market for medical cannabis, not including wellness CBD, only medical cannabis, is going to be between 2 to 3 billion euros. So we're talking about a market that in the next 4 years will be between 2 and 3 billion euros. Now, that's the most conservative analysts. You have some more optimists that will say it will be closer to 5 or 6. I think that we are now in a place where the discussion has moved from will cannabis be a big industry? To the new question of when it will be a big industry. So the discussion now is not on how big it will be, it's how big it will grow. What is the time frame? We see what's happened in North America, Canada, the US. So this market is going to be massive. In the end, it's going to be a very, very big market. If you look on Israel as an example, on medical program, you will see around 3 to 4% of population that will have medical cannabis license. You can just, use these percentage in UK and Germany to understand the potential of this market.
Yeah. And like I said, especially you can sort of break it down, I suppose, as North America and is Europe and is other parts of the world. But so as far as the centre of Europe, is UK well placed? I mean, there's several listings going on there. Are we well placed to be centre across Europe?
I believe that the UK has a huge opportunity right now. So it's correct that Germany right now is the biggest market for medical cannabis. But when you're looking on the potential that the UK has, you're looking on the financial market and the backing that London Stock Exchange can give companies. And on top of it, took this unique situation post-Brexit, where UK can move faster, not connected to this big, more bureaucratic union. There's a huge opportunity for decision makers and the government to really take the lead on medical cannabis and be the example for the rest of Europe. A bit like Canada did for the world maybe, and for the US, UK can do that in Europe. And that if that's something that will happen soon, it can bring a whole new growth and probably golden age to the UK.
Yeah, absolutely. Avihu, every day on the podcast, I highlight the top 5 most followed companies on Vox Markets. And to get on that list, of course, many people have the follow button on your page. So if someone's listening right now, likes the sound of the progress you're making, but are not yet following the story, please give them 3 quick reasons why they should hit that follow button and add you guys to their watch list, please.
So I think the first one is that we have several announcements coming in the near future. So I guess this is a quite comfortable way to receive this information. Mm-hmm. It's very comfortable to get this directly on your smartphone. And that's a feature that I think will be great. And in the end of the day, look, in general, not only for Kanabo, I believe that more information and getting it quickly and fast is a key in taking decisions and investing. Excellent
stuff. Avihu, good to chat to you. And like I say, lots of news coming out, so no doubt we'll be catching up in the not too distant future. Thanks very much.
Thank you very much.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5, Shield Therapeutics, up 1.94% to 53.5. At 4, Argo Blockchain, up 6.4% to 250. At 3, My Health Checked PLC, down 7.35% to 3.1. At 2, Rambler Metals and Mining, up 3% to 0.352. And at 1, Fragrant Prosperity Holdings, Prosperity I should say, not Posterity. No, I'm getting that wrong. Down 10% or 11%. It's FPP, by the way, 6.125. They're looking at investing, of course, a shell investing in CBD stuff. It's very popular at the moment, CBD, isn't it? So, okay, it's time for the top 5 most read RNSs on Vox Markets. At 5, there's Ilika, Styriax manufacturing update. Good update there. I would say that, I hold. At 4, 7 Digital signs premium home fitness innovator. At 3, Horizonte, award of power line license for Araguaia project. At 2, Amigo Holdings, third quarter results. And at 1, it's Dev Clever Holdings, agreement. That's it for the podcast. Thanks for listening. Much appreciated.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.